Good morning, everyone. Welcome to the Stock Market Morning Prep video for Monday, March 17th. Happy St. Patty's Day to everyone. Last week we had markets down about 2.4% for the week. A lot of concerns coming out of China's economic data seems to be weakening. And of course, the tensions out of the Ukraine and Russia are intensifying. So a lot of concern, a lot of geopolitical risk out there. So markets are getting a little nervous. And obviously at these lofty levels where we continue to trade, we need to pay attention to what's going on. Now, we did have some technical damage, but I want to look at the bigger picture, and I want to show you what I think from the charts, okay, not my opinion, but what I'm thinking that I think we are getting into some sort of a market top here, and some of the different sectors are really giving us a sign that that these two sectors I'm going to show you, bonds and gold, if indeed break out, we can have a pretty decent correction, which is healthy. Remember, the longer term picture on the charts look very, very good, but in the shorter term, it looks like that we may be carving out a top. Now, let me just take a look at a couple of key things here. I want to look at an end of day tick. There's an end of day tick reading. When we get below zero, the zero line, we continue to stay below that. And if you can see, most of 2013 we were above it. You know, other than these small little blips down, and we shot right back above it. But when you see this tick, end of day tick, starting to really come back in here, hold, can barely get above 400, and then break back down again. Now on Friday we were down below 21. Is something that you need to be watching. Okay, so keep an eye on the tick. Let's take a look at stocks above the 50-day moving average. Of course, as everybody knows, one of my favorite indicators, excuse me on that, one of my favorite indicators, something that I like to look at, and this is indeed at the area where we look to get some sort of a sell-off. So I am watching this here closely now. Sometimes this indicator tends to bounce back above 80 and move down, but as long as it's making a series of lower lows and lower highs, as you can see here, then I think you know, you're going to see some further downside. So we have stocks above the 50-day moving average, as you can see, created a sell signal. Take a look at the VIX here. Now the VIX, interesting. The VIX is starting to explode to the upside. Now everything doesn't just go straight up in a line here, but as you can see, we're breaking to the upside, and we are now outside of the Bollinger Band. Key area of resistance comes in around 1850, 19 bucks. But if you see that fear is starting to creep up into the market, that means that a lot of market participants, investors, are looking to buy protection. Clearly, and that's a smart move to do, but not now. Not when the VIX starts to break up. You should have been buying protection down here around $14. And I've stated many times for many months, it's like, listen, buy insurance. It's worth it. Technically, if you're buying a put and it expires worthless, so be it. But at least you bought insurance to protect against your longs. And if you are heavily positioned to the long side, you need to understand that your longs will deteriorate much rapidly when markets do sell off. Risk happens really fast, and something that I want everybody to realize. And as you can see, we have some positive divergence here forming in the MACD and stochastic. So this, to me, is a bullish chart for the VIX and bearish for equities. Okay, so another sign here that I think that there's a big change in place that's happening. The EEM, the Emerging Market ETF, like I've mentioned to you before, we need to keep an eye on this. Key pivotal low is going to be right here at 37, as you can see here, these two areas. If we start to really break down, and I think we can, I think the markets are going to be in trouble. Now, the market is well overdue for a correction, and I'm not talking about a 5% correction. I'm talking about more like an 8 or 10% correction, maybe even more, 12% correction. But once that correction does subside, then I think the markets are going to really explode to the upside come towards the end of the year. But I think the markets are putting in some sort of signals here, and this is what I want to show you. Now, I want to get into the most important part of this video. As you can see, this is a monthly chart of gold. Gold has been in a bull market since 2001. Why? Well, we broke back above the 8 and the 20, and that 8 and 20 held all the way up until just recently, up to 2013, where gold actually started to break down. Gold crossed the 8 and 20 in 2013. Now we're in a bear market. Now, are we in a bear market at the moment? Yes. However, if you dial down into the smaller term time frames, which I'm going to show you, this may be just coming in right into support and pausing before now another major move to the upside, right? Because this is a big move. Now, it's healthy for the markets to correct, and same thing with gold. But if you see how we paused here right in this area, now it has a lot of work to do. I think gold chops around for a few weeks, and I think you're going to see a next push in gold come up. Now, once that 8 and 20 crosses back above this area, this 20-month, and we get crossed back below, that means that gold has re-entered a bull market. And that means that gold will then start to explode higher and move much higher and take out the highs of 1900, which that would mean to me is that gold moving higher, equities will be moving lower. Okay, so that's something that's a big concern here. When you see gold not selling off anymore and people are buying flight to quality, flight to safety, you're going to see this. This is a very interesting developments. And I'm talking about this video more for the coming weeks. Okay, this is not for tomorrow, for day trading, but it is for if you're starting to build positions and you want to position your portfolio. I would say be light for the next couple of weeks and then really start to dive in and take a look at once we get the signal that equities has topped and it's confirmed, and we look to start selling rallies, you could start building a beautiful position in gold. And my next chart will be the GLD. You could use the GLD, and what I did was I took all of the moving averages and everything out, make it really simple. And what I did was I took a high to low, okay, and I projected it. Now, if you look at the volume profiles, right, we have a very, very light thin zone here coming in around 135, way all the way up to like 155. We had a series of lower lows and lower highs. We did break that bearish symmetry, and now we're chopping in a basing pattern here. This is very interesting. This is a real nice basing pattern, which I love to see this thing start to break out. Now, we had a big move here, right? So I think we can kind of step down a little bit, making lower lows, lower highs, maybe for a few weeks, or even not even, just keep it around 130 and chop around, create another new base at these areas, and then have enough momentum and pop out and break out of this resistance area. Once we break out of this area, there's plenty of room to run where we can start building a position, or I would recommend at least looking at the GLD to start looking to get long on any dip in GLD. But it needs to take this out. It needs to take this out and hold. So there is some work that needs to be done. So that's why I'm saying the next few weeks, let's keep an eye on the GLD and see where this market is headed. Okay. Remember one thing: the markets are made to fool the masses, and that means that I would not be surprised if the markets actually pop higher again sometime, maybe this week. This week is options expiration monthlies, and it does play a little bit of a twist. You know, the specialists, the market makers, excuse me, they play their games. So wouldn't be surprised if we move sideways to have a slightly up week this week, and then of course we will reevaluate it. But it would not surprise me in the very least that we run up a little bit and we make the lower high off the previous high, and then we start to sell off again. So be prepared for that. Keep a light book right now, and I think that what you should be doing is looking at these key areas: gold, and then of course the bonds, the TLT, the 20-year. Okay. Now here's the overlay I've been showing you for weeks. We have the S&P making higher highs and higher lows, and also what's happening. We have gold and we have bonds making higher highs and higher lows, and bonds just based here for the last month, maybe 5 weeks, 6 weeks. So this is very interesting developments. Remember, the bond guys are the smartest guys in the room. Bonds always take the cue or what equities. So if bonds are moving higher, equities will move lower. Now again, we had a little bit of that manipulation when QE's happening, because the Fed's buying bonds and buying treasuries, so bringing bonds lower. But after a while, when they can't do that anymore, or they're not in control, and you see bonds start to move higher regardless, that's flight to safety. So that's something that you need to look at, especially if you're swing traders, because if you're looking to build a little bit of a position, 3 or 4 or 5 different sectors, and you're holding, 10, 15 positions, or even 5, you need to be aware of what's happened, that we may have a major downturn here in the markets, at least in the short term. Okay. Now remember, this is not saying that it's going to happen. This is saying that it's pretty good that what we're seeing in the marketplace and what the charts are saying, that there's a possibility that we can have a decent correction in the coming weeks. All right, now let's dial it in even more. Here's the spiders, and as you can see here, the February 6th low is going to be a key and pivotal low, which coincides pretty much with the 200-day moving average. If we lose that, now we're kind of way a ways around it, I understand that, and it has some work to do, but if we lose that, if we get down to this area here, and we start to break down, I think that'll more than likely confirm that we are into a correction right now. And obviously, we don't want to look to short down here. But what you could see is that if we start making a series of higher, lower lows and lower highs, next trigger on the next rally that fails, you can literally start legging into a short position. But right now, I think it's a little too early. Okay, we did have a down week last week, and we need to see what happens. This week coming up. But if we do have, right now, if we do have a bit of a bounce, I'm looking for somewhere around in the spiders, somewhere around 186.80, 186.50, no more than that to fail. And even if it did get up to the top and took back this red candle, I still don't want to see it taking out the highs. Or I want to see this rally, this next rally, if it does happen, to really be minute, very sloppy, sluggish, and no volume. That's the cue for us to start selling. So that's going to be the next really sign, is we got to monitor what the rally does. Okay, let's take a look at the TLT. Here's another one. Now it took a high to low, and it gave us a 38% retracement right here. You got a 50, and look at the thin zone again. See the volume profiles? We're down here at the 38%. If this takes out this area here, the 38%, there's plenty of room to run to the upside. And look at what's happening. You think bonds are selling off? No way. They're creating another channel, and we have positive divergence forming as well as price. So this to me is telling me as well that, hey, heads up, watch out, something is brewing in the marketplace. All right, transports did a high to low, and looking for the next pullback. The 50 and the 61% is right around the 50-day moving average. 50% retracement comes in around 131.22, and then of course the 61.8 right around 129.50. So this is going to be an area where this is going to need to hold. Usually we get a bounce off of these two areas, the 50 to 61.8% retracement, and if that holds and we start to bounce, let's see where it stops. Okay, remember the transports is our leader, and it's not doing too well, so it's something that we want to pay attention to. Here's the Russell, secondary leader. It is breaking down as well. But right now, as you can see here, it just looks like a bull flag right now forming. And right now, that's really pretty much all it is. It did catch the 20-day on Friday. And again, 50, 61.18% is way down here below the 50 and the 200. It is holding up relatively well. But again, our secondary leader is showing signs of weakness. Qs. Now, it is actually breaking down faster than the other two leaders, and it's now just about touching the 50-day moving average. But again, all these indicators are rolling over, and we are overbought. So it's a sign that we really need to pull back anyway. So any correction really is healthy for the markets in the longer-term picture. Diamond, same thing. As you can see, it's starting to break down. It's now below the 50, and I have a suspicion that it's probably going to test the 200-day moving average, as well as all the other indices. They're going to start to break down. But I do see this in a bigger picture. But again, nothing is confirmed. We want to get confirmation. We don't just go out and short the market and buy gold and buy bonds, right? We want to make sure that price has confirmed that it has topped, meaning the S&P has topped, and now we're looking at lower lows and lower highs. That's when we start looking to get in. But we want to be prepared. And this is why this video I'm showing you, it's a possibility. Hey, look, we can turn right around, and the government could say something, and they could be all of a sudden back to normal, and everybody's buying dips again. But I just want you guys to be prepared and see what's under the hood. Okay, XLF. Last one will be the XLF, and as you can see here, banks, the first thing that goes is going to be the high beta names, the banks, the solars, the builders. Well, these are the three that I love, and I want to see this market pull in, and that's what I want to scoop up when this, if the so-called correction is really starting to be underway. Those are going to be the names that you want to start accumulating. Okay, all right, guys. Hope this helps. Be very careful out there. Use your stops, and again, when in doubt, cash is definitely a position. Remember, it's options expiration monthlies. So, the specialists will have their fun with their games. Let's be alert, and let's really make some wise decisions here. And be careful. You don't have to keep trading, every minute of the day. Take a couple of key stocks, trade them accordingly, and remember, stick with what the trend is for the day.